What's going on, motivators? In today's video, I'm going to teach you all about why refinancing with a VA loan is so much better than refinancing with a conventional FHA or any other type of loan on the market. Refinancing with your VA loan is not only the easiest refinance out there, but it's also the cheapest. So first off, what exactly is a refinance? Well, a refinance of a mortgage is when you're going to take your first mortgage and you're going to basically have a new lender pay off that old mortgage company to start up a completely new mortgage with them. Now you're going to start over your term. So whether you're in a 30-year term or a 15-year term or whatever it is, you're going to restart that term with a new mortgage lender. But why would I do that? If I was so far into my mortgage already, why would I want to restart it? Well, the simple answer is because if you were to refinance and take your interest rate, say from a 7% down to a 5%, well, on a $500,000 house, you might be able to save yourself like $600 a month. Now, those savings can really add up. So more often than not, when someone's refinancing, they're trying to get a lower monthly mortgage payment. They're trying to pay the bank less interest than they were when they started the mortgage. Now, as you all know, when you make a mortgage payment, a set amount goes to the principal and a set amount goes to the interest. So if we were to take a look at a $500,000 mortgage, well, this is what the payment would look like for principal and interest if you were paying it at a 7% rate. Now, let's say you were to refinance and you were going to get yourself into a 5% rate. Well, your principal and interest payment would look something more like this. So if you're saving this much money monthly, now you can see why it's so crucial to sometimes refinance your mortgage if you're going to get a lower interest rate. And the best part about this is because you already have a VA loan, you can do something what I like to call a VA-IRRRL. Now it's IRRRL, VA-IRRRL. What does that stand for? It stands for VA Interest Rate Reduction Refinance Loan. Man, the VA and their acronyms, right? But the best part about this is that it's so easy to do. You're not going to do an income check. You're not going to do an employment check. You're not even going to have to do an appraisal or pay for that. The only thing that the bank is going to consider is they're going to take a look at your IDs. They're going to take a look at your mortgage statement. They're going to take a look at your utility bills, your property taxes, your homeowner's insurance pages. But other than that, there's really not too much documentation that you're going to have to provide to the bank. And this can be done in as little as 2 to 3 weeks. So while right now might not be the best time for you to do a VA-IRRRL to lower your interest rate down, it might become so in the future. As a general rule of thumb, if you can go down 1% on your interest rate, you should refinance, especially if you already have a VA loan. So for instance, if I can take you from a 6% down to a 5% or a 5% down to a 4%, you're going to see a tremendous amount of savings every single year. Now, I don't know exactly what the market looks like while you're watching this. I only know what it looks like right now while I'm recording it. But what I want you to do is reach out to me and contact me if you have any questions to see if you're eligible to save yourself a ton of money by refinancing. I'm Justin Chermak. I'm licensed in multiple states across the country, and I'm a VA loan advisor. I can help you to get the absolute lowest mortgage payment possible. Oh, and did I mention I'm also a Marine Corps vet? Raw. So why not let one of your own handle the loan? Let's go motivate.